Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks in studio. Finally, let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, the co-founder of LikeFolio. Landon, welcome to the show.
Thanks, Tom. Good to see you, Kevin, in studio. I love it.
Yep, two bald guys in studio. We're back. Landon, we're talking Coinbase. Shares down about over 60% so far this year. It seems like, volumes that Coinbase relies on is kind of attached to the price of Bitcoin, which has been falling over the last year and a half or so. But, I look at the revenues are supposed to be just dismal, down 150% from last year at this quarter. So comparable is going to be tough. Hey, one positive, Cathie Wood sold all of her Coinbase, so she's been ice cold this year. So maybe that means that we're going to see a rally in Coinbase. Are you seeing any positive data on this company? Because, Bitcoin's still hovering around 23,000 at this point.
Yeah, I tell you what, if you're going to be a Cathie Wood contrarian, it could be a tough road. I mean, I get it lately, but I don't know if I want to go that route forever. But I will tell you, last quarter, we came on the show. I think our score was -99 on Coinbase. This is the worst we've seen, and they just got destroyed by the market. The stock was off like 26%, 25, 26%, something like that. Revenues are down. Monthly retail users are down significantly, like 20% quarter over quarter. Really bad numbers. And just like you said, it's all about Bitcoin. Like there's an excitement in the crypto markets when everything is going up. You got a nice bull market. Everybody's bragging about it. You get the fear of missing out. All the friends start jumping in, people talking to each other. And the opposite is true on the other side, right? And that's kind of what we're seeing right now. I mean, we're seeing really low levels of people just talking about investing in crypto in general. Very low levels back to, middle of 2021, like last year at this time. So we really missed out on a lot there. A lot of people are just not interested. In fact, if you look at people talking about investing in crypto, it's down about 4% year over year. It's down significantly quarter over quarter. But the number of people talking about selling their investment in crypto is actually up year over year. So people are exiting. They're getting out of this right now. And maybe when there's another bull market, things will turn around for Coinbase. But, it's not just retail interest in investing that helps Coinbase, but it's also the way that their fees are structured. It's a percentage of the order. So Bitcoin at 69,000 is 3 times better than Bitcoin at 23,000, just from a revenue standpoint, if you've got the same number of people making trades. And you can, obviously that's very bad for this company. You can see purchase intent here just absolutely falling off a cliff. They had a nice run, really nice run towards the end of 2020 and up all the way through 2021. But all year, it's really just been downhill for them, all of 2020. And incidentally, even though they're the leader, it's really, really fat, the margins that they're taking. I mean, they take 0.4% for a maker, which is basically a limit order, and 0.6% for a taker is what they call it, which is basically a market order, which us trading in the markets understand that to be. So averaging around 0.5%, but 0.6% for a market order. That is insane. I mean, you can go on TD Ameritrade and trade for free in stocks. And if you're trading 1 Bitcoin on Coinbase, it's going to cost you about $140 in fees. That is really, really high, and there's no way that's sustainable. There's going to be competition coming in, taking those margins out. So a leader today could mean different than a leader today in a year or so. A leader in a year or so. It's just different when people start taking out your margins. So, we're concerned with that. But then there's also the happiness concern. If you look at just how users have reacted to Coinbase in the news lately, I know they're off big today. They were up big not too long ago based on some BlackRock news, but this is a chart of our user happiness where red is positive. Red is negative, green's positive, and that line that goes across there is the kind of the ratio between the two, which tells us what percentage of users are happy with Coinbase. And it's not good to be falling. We're actually getting, you can see here, we're at 3-year lows, but we're getting to the point where we're approaching all-time lows on happiness for Coinbase. They're down about 9 points to 57% right now, which is really low number. So this is people not necessarily frustrated with the price of Bitcoin or how their investments have gone, but just frustrated with the platform itself. So again, that's a concern. So I think they've got a lot of things kind of working against them right now. On the plus side, you could say, well, their PE ratio is 9, which is pretty low. But the other side of that is, don't forget, there's two things that go into a PE ratio. There's price and there's earnings. And if earnings go down, that price can go down with it at the same rate, and the PE ratio stays the same. And with earnings and revenue falling over the last quarter and looking like it's continuing to fall, investing based on a value perspective is a dangerous game for this growth company, which doesn't seem to be growing.
So, Landon, you have a negative 99 earnings score on Coinbase, so you're saying there's a chance, right? Is that what is that what you're
just
telling
to clarify,
me?
Kevin? Just to clarify, that was last quarter. We were negative 99.
Oh, things have gotten better? Is that what you're saying?
We knocked it out of the park. It has improved. Coinbase is much better now. It's all the way up to negative 83. So
there you go. So yeah, exactly. So here's the thing. Let's simplify this for our viewers, Landon. Just like crude oil and energy stocks, just like interest rates and the yield curve and banks, this company is tied purely to crypto, right? If crypto stays relevant, they'll stay relevant. If crypto gets less and less popular, they'll get less and less popular. I mean, if you look at a chart on the Thinkorswim platform, and if you lay Bitcoin on top of Coinbase, it's highly correlated, both on the upside and both on the downside. So that makes it, from a directional standpoint, pretty easy to trade this stock, right? I mean, in terms of directional. Now, this thing can rip. If you look at a chart of the last 5 days, Landon, it's been 116, it's been 60, and now it's 90. This stock rips, and that's 5 days. That's not a year. That's 5 days, Landon. So this stock is all over the board. It's either going to be good news or really bad news. I'm not sure which way, but at the end of the day, your data, does it show that get crypto right and you'll get Coinbase right?
I mean, I think so, because it follows so closely, right? Just like we talked about, the number of people interested in investing in crypto goes up as the crypto coins go up. And don't forget, their fees go up as the crypto prices go up. So it's a compounding effect both ways. So as they're going up, more people are hopping on, more people are trading. They're paying a higher dollar fee because the percentage is based on the coin price. If all that's going up, then yeah, they're going to expand. It's going to be amazing. And we saw that in the past. Now it's the other side. Everything's going down. There's less people interested. They're paying less on a per coin basis because coins are worth less. So it's going to go the other way. So this is a very, very volatile, I guess you could say, understatement there. The market maker move is only about 17%. That's normally really high, but just seeing how this thing has moved around over the last week or so, it's actually seems kind of low. I do think expectations are very low. So maybe there's an argument to say it's a little bit oversold, or the expectations are so low, especially after today's price activity. Maybe the bar has been lowered a little bit and it could be easier to beat. But everything that we've got data-wise, just looking at the consumer macro trends, looking at purchase intent, looking at happiness across the board, it's negative for Coinbase. So I'm not an investor here. I think that the model is good, but rewinding 20, 30 years back when brokers could charge these kind of fees, $140 to make a trade, it's just a matter of time before competition comes in and forces the price to come down. So even if Bitcoin does get up to 50,000, 100,000 over the next few years, they're going to have a lot more competition. They're not going to be making 0.6% on every trade.
Landon, and I get it. A bunch of your data is based on, what consumers are doing when, Bitcoin goes from 69,000 down to 20,000, 23,000. Of course, you're going to get those naysayers. Now, from your perspective, do you guys see any data that says that investors and traders and people on social media are more concerned that it's not a good asset class to invest in, or are they still positive on that aspect of Bitcoin when you look at the data?
They're less confident for sure. And of course, that's going to be the case when the price gets cut by basically 2/3 over the last year or so. Absolutely. They're less confident as an asset class. And you know what else? They're less confident in the platform. There's been a lot of stories out there, whether or not they're true. It lowers people's confidence as to what might happen in a liquidation event, what might happen if Coinbase gets hacked, all these things. And normally, if you rewind a year or so ago, those kind of stories were reserved for these really small kind of out there exchanges, foreign exchanges. It was never the U.S., the big U.S. company of Coinbase. Like, they were supposed to be the really safe one. Nothing's happened yet, but it has scared people. It's scared them just a little bit to think, you know what, maybe I should keep my coins off of this platform. Maybe I should get a hardware wallet and all that. So I think that between the coin coming down and people having less confidence in crypto as an asset or as the sort of the digital gold, and then of course the altcoins really struggling, really struggling. That plus the fact that it's just less confidence in the platform. I think that's really driving things away from Coinbase. And I think that actually has a lot to do with their happiness being so low, where it is right now at about 57%.
Right. And falling, according to your data there, too. Awesome. Great stuff, as always, Landon. Thanks for the breakdown here on Coinbase. Have a good day.
Thanks, guys. Take care.
All right. That's Landon Swan, the co-founder of LikeFolio, breaking down the data, Kevin, here on Coinbase. I mean, it didn't seem